Welcome back to another weekly review. We're going to be looking at the trading week of May 4th, 2026. Getting data out of the way, there's not a much. There is NFP towards the end of this week, but as far as what's going on early week, we don't really have a lot to pay attention to. So Monday, we have no major data. We do have a bank holiday in the UK and Asia on Monday, so I would assume that trading volume in the Globex session Sunday night and through the evening and the night is going to be quite light. Tuesday, 9:45 a.m., we have services PMI, 10 a.m. ISM services, JOLTS, new home sales. Wednesday, we have the ADP monthly employment change, and then we have Fed speakers throughout the day on Wednesday. Nothing really to pay attention to there. 8:30 a.m. we have jobless claims, and then 8:30 a.m. Friday we have NFP and the unemployment rate, as well as consumer sentiment and inflation expectations at 10 a.m. So obviously, data-wise, Friday is going to be the most important one with those prints coming out. It'll be interesting to see if swaps start to move as that employment data comes out. Obviously, we had Powell's last meeting chaired as the Fed chair, so everything going forward is going to be, coming through Kevin Warsh. Powell's still going to be a voting member of the committee so far. So it'll just be interesting. It'll be interesting to see how, the market reacts and potentially prices interest rate changes when that data starts to come out, if it does at all. So something to pay attention to, not really super important for day trading, but as far as, bigger picture, be interesting to see. Earnings, we don't really have anything of note this week. We have Palantir on Monday after close, and we have AMD after close on Tuesday. So obviously AMD will be big for the semi sector. But as far as, big market moving names, those are all done for now. They're out of the way. So we don't really have to worry about that, which is nice going into this week. As far as bigger picture, pretty impactful week for sure. This is an historic move as far as, the speed at which we've made, this progress to the upside. As far as how fast this has happened, I certainly didn't see this coming. I didn't think we'd be moving, this far, this fast. I figured, after we started to reclaim the bottom of balance, moving to the top of balance is a fairly normal move on any time frame, really. But the speed at which we've done this is insane. So thankfully, if you're still invested in the market, if you have a long-term portfolio, etc., which I do, I have several, you capture most of this, right? So like if you're correctly allocated, you're capturing, a big fast move like this, and you can really kind of sit back and you don't have to do too much when stuff like this happens from a bigger picture perspective. So that part has been nice. From a trading perspective, the last couple of weeks hasn't been particularly difficult, I would say, but it's one of those, these have been moves where they've just gone so much further faster than I would have expected that you end up, or at least me, I end up taking points and then it just keeps running. Or I hit TPs, I end my day, and then I look back and we're 20, 30 points higher sometimes, which is kind of crazy. It's been kind of nuts. As far as where we're sitting now, I'm using this as an example here. This is the daily chart. This is the S&P 500 ES, and what we can see here is the old monthly balance range that we had, that I feel like I've been literally talking about this 4 months, because we've been in it, where we were in it since last October. This old balance range, obviously we broke back in, traversed it insanely fast, broke back out. We're looking at the extensions from this monthly balance range. So Friday hit the 50%, like 150% of this range to the tick, basically, on Friday, and we reversed kind of on a nasty slow crawl down. We'll look at this more granularly in a minute, but we had a bit of a nasty slow crawl down. I think this is a gravestone doji. I think there's another name for it too. I don't actually care about candle patterns or candle names, but the big thing I'll say here is that where this reversed, where this stalled, and the high that we actually put in on Friday is actually pretty good. Like, objectively speaking, it's actually a good high. We have a very nice taper. Up into this high. We have, it was kind of a nasty slow drift down. But as far as, the way that this looked from an order flow perspective, and the way that it looked on on the NASDAQ from an order flow perspective, like, it's actually a good high. So what I would be cautious of here is we might potentially have a short-term reversal. We might have a local top in here. And when I say that, there's two things. I'm not looking to go uber short on this market. I'm not looking for a crash. But the big thing when we see, a good tapered high, a good excess high come in and we see, a down close is we have to be conscious of the fact that we could potentially have finished a short-term auction. So if that's the case, the big thing really is going to be looking at April's highs, which are right conveniently right up here, 72.50s. So we have an unfilled gap. So we gapped up, true gap was never filled in the RTH session on Friday. If this is going to be potentially a local top for us to have some consolidation, potentially a nice pullback into a bigger dip buy, because that's all this would be really, in my opinion, then what we want to see really, ideally, is April's high and this RTH gap continue to offer Sunday and Monday. So this 72.50 to 72.50 to 72.60 area, the bottom of Friday's value, if you're going to be a seller, you don't really want to see us start breaking above this area again. So it's going to be really simple for me come this week and come early this week. If we're above 72.50s, if we're putting in a decent bid here, if we're holding 72.50s, then the trade is going to continue to be long and I'm going to continue looking for those long extensions. If we end up not being able to stay above, so this breakout, this huge, crazy trend day up that we have, very poor structure below, be very easy for us to backfill this. If we're below 72.50s, if we can't stay above 72.50s basically, then I'll be looking for that short trade to backfill Thursday's range down into the bottom of last week's value into 7,200. And I think more likely, if we're failing April's high, I think more likely what we'd see is probably a short-term liquidation back down into that prior daily balance range, which was very impactful the last couple of weeks, down into 71.80s and the meat of last week's value in POC at 71.70s. So if we see this, a nice backfill into this 80 to 70 range again, if we're holding this, like if we're putting in, a very good low, if we're putting in, it's very clear that, buyers are making a stand down here, then it could again just be a continuation long trade buying into the pocket and the meat of last week's distribution into the bottom of this LVN in here. This could absolutely be another long trade to take us, continuation longs back up. The big thing that we have to consider is that, the speed and the volume and the aggression of the buy side of this market has been so significant that any major pullback that we get, we have to potentially still look at this as a buying opportunity while price continues to form value above a prior monthly balance range. That doesn't mean that the short trade isn't going to be viable, because I think it absolutely is below 72.50s, but it's just a question of how much meat do we actually get on that type of trade. So below 72.50s, hopefully look for the move back into 71.90s to 71.70s, really 80s to 70s. If we're below the meat of last week's distribution, so if we have a headline, if we have whatever it is, whatever the situation could be, if we start offering 80 to 70, then I think we're going to liquidate back down, probably into the bottom of that prior balance range, down into 7,080s, probably down into the 20-day simple moving average, down into 60 to 40s. And then again, this is the huge area that we need to be conscious of down here into potentially, a really nice buying opportunity. And this would be a perfectly natural move on this market too, right? Like we're very, very extended to the upside. We have, a potential reversal. We have a good high and a good spot on this market. It would make a lot of sense, at least in my opinion, it would make a lot of sense to take a breather here, potentially backfill this into some of this poor structure. We have the 20-day simple moving average down in here at the very highs of the prior monthly range that we broke out of. Is also the 20-day simple moving average. Obviously, this is going to move up a little bit as well. But this area is a very natural retest. Like if we're looking at a weekly time frame, if we're looking at even a monthly time frame, this would be a very, very natural retest. And it would still be very bullish if we hold this. That's the big thing to consider as well, is that, if we're still coming back, we're holding above a prior, we back test and hold a prior breakout. Again, there's nothing really bearish at all about that. So price is obviously very extended to the upside. Doesn't mean it can't continue extended to the upside, but I think just be conscious this week of the fact that we could have a breather. If we don't have any acceptance below April's high, if we're holding outside April high, longs, just buy it and see how far we go basically. So I think the big thing really would be, if we're looking at a completion of this range, this technically completes into like the 7,500s area. And if we're above, April high, especially if we're above last week's high, like I really don't see a reason why we just don't, continue building value and continue just, slowly grinding higher up into this range. So there's the phrase "sell in May and go away." Maybe that holds true, maybe it doesn't. Historically, that doesn't actually hold true at all. May is not historically a down month over a long period of look back. I think it averages about 0.5% gain in the last 50, 60 years. I'd have to look. I pulled those stats, but it's not traditionally a down month, which is funny. But I think from a simplicity standpoint, using April's high and then looking potentially for, filling the structure is very natural move back into the last week, meat of last week's value. If we accept last week's value, we put in a good low here, then again, continuation long trades back up. And if we start losing, 70 to 80 or 80 to 70 in this range here, then, the potential for a liquidation down to the bottom of that old balance, I think is quite possible in the 80s and potentially all the way down to that big area we talked about. So that's going to be fairly simple way to look at it. Obviously, you can look at it simply at the beginning of the week, but trading it intraday is very different. Sometimes if you don't follow your plan or if, headlines come out, the tape gets weird, etc. NASDAQ's going to be basically the exact same thing. If you follow me on Twitter, which I would assume most do that are watching this video, all 100 of you, thanks, appreciate it. The area that I marked on Friday, or mentioned on Friday, was 27,950s to 28K. This, from a bigger picture perspective, was a dead zone for me. And when I say it's a dead zone, it's basically a confluence of areas, extensions, deviations, et cetera, that all kind of align into the 27,950 to 28K area. That's going to change. So these aren't static. That's going to change, and these are going to move. But in this area, it would be the first area I was looking for that we could potentially start to have some exhaustion into the highs. We didn't quite make it. I'm kind of impressed at how close it actually was, but we didn't quite make it into 27,950s. But again, first thing that'll be, I will be watching this up here if we do end up, going higher, but this is eventually probably going to move up into like the 28,200s area, I would assume, if we're above it. But with that being said, the idea, generally speaking, again, to keep this simple, is basically the same on the NASDAQ. So again, super nasty squeeze higher, open range drive, a period drive, and then, set the range for the day and then basically do shit all. April's high up into 27,630s is going to be critical for me. It's going to be the exact same idea really here. If we're holding April's high, then again, I'm just continue to look for that long trade, continue to look for the extensions up into the 950 to 28K, potentially all the way up into 28,200s as well. And if we're losing April's high, it's going to be the same idea. We have a naked POC, daily POC down at 27,400s, which is also last week's POC. Again, very natural move to come back down, test this range. And we could potentially find, buyers. We could find a good low down here as well. If we're below 27,400s, then again, I think it's going to be similar to ES. We have an unfilled Globex gap down here. We have a naked POC down here at 26,900s. I think below this, there's probably a decent chance that we have a short-term liquidation of this range, and we probably come down, finally fill this gap, and probably test the top of prior balance highs that we broke out of down into 26,800s. We could also see, the same thing could be true here on the NASDAQ as well. Like if we start really slipping, and again, there's no reason to assume this is going to happen, but if we see this happening for whatever reason, then we have to react to it. And what I would say is that if we start losing, the meat of last week's value that we built above, all prior weeks, my guess would be that we're probably going to have a short-term liquidation. And this would probably entail moving probably back down into at least, really below, I think below this break and hold and the building of value above, above these weeks, basically the 27, we'll call it 2780s, 080s here. If we're starting to get below this, then I think a very natural move would be a liquidation break, flushing out late buyers, and probably coming down into 26,500s, as well as potentially as low as 26,300 to 26,200s. And again, this would be a very natural move on a higher time frame basis, right? It's the same thing on the NASDAQ. We have pretty shitty structure as far as, how this has moved. Again, super speed, crazy aggression, terrible structure below us. If we start getting below, below those areas, then coming back into the breakout to test the breakout, coming back into the 20-day simple moving average, coming back into this range down in here is a perfectly natural move. And if we start holding this area again, it's probably just a reload to continuation long. So hopefully it's fairly straightforward. I feel like a lot of the levels that I talk about and a lot of the trade setups that I'm looking for have been happening in Globex. which has been tough because I generally don't trade Globex, and for no other reason than the fact that life comes first, and being in front of a screen 20 hours a day, as much as people online will tell you that's what they're doing, and they're hitting every single level, and every level they have on their trading view is hitting. And Globex, a lot of those people aren't actually trading. A lot of those people are going to be selling you subscriptions so they don't have to trade. So just, take that with a grain of salt, that a lot of these moves, unfortunately, are happening, just when you're not going to be around. So I've had pretty good plans so far for myself that I put out there. Haven't been able to execute as well as I'd like to on some days, just because, it's just been either choppy tape, or it's been, what I've been looking for has happened, when I'm not even at desk. So it is what it is. But hopefully these help at least to some degree. If they do like the video, subscribe to the channel if you haven't. I appreciate your time. Thanks very much.